Good afternoon, sir.
Loud and clear. Good afternoon. We can hear you.
Okay, that's great. You're welcome to another class. Today, our objective is to round up on cash flow statements, just so that you'll be able to solve any question that you would find on statement of cash flows, except consolidated statement of cash flows. That is the only one that will remain. And I'm going to deal with that as soon as we are done with group account. As soon as I've introduced you to group account, then we'll be able to really deliver that properly. So last week, I already solved one question. I've explained the core principles around statement of cash flows. But in order to do justice to the topic, we need to solve more questions so that we know that it's done totally. So the major highlights of what we discussed last week, the key for me is one, I mentioned that statement of cash flows is a statement of changes in financial position. So, which was the approach I used to solve the question that I
Only for him to, when he was looking for the
and
question, not see, but he not get it.
is also going to be the approach I'm going to use to solve the question I'm going to solve today. Any question on cash flow, that's really the approach. So all we are doing for statement of cash flows is for us to just identify movements in position, like movement in your assets, movement in your liabilities, movement in your equity. That movement is where the cash is. We said there are three activities in the statement of cash flows: operating, investing, and financing. And we also mentioned that there are two methods for preparing statement of cash flows: direct and indirect method. The difference between these two methods lies in the operating activities. That's where the difference appears, which means that irrespective of the method you're using, investing and financing remains the same. It's the same way. But for operating activities, they are different. And the difference is in the manner in which you get your cash items in the operating activities. For the direct method, which you have not looked at, that's the first one we're going to look at today. That one, you would adjust each item in the statement of profit or
Where's my
loss.
earpiece?
You
Okay.
adjust them for
No, don't worry.
non-cash items. You adjust them to identify the cash items for direct method. But for indirect method, you would have to work back from either your PBT or your profit before interest and tax by ensuring that you remove all non-cash items from that profit, just so that you can then move from an accrual-based profit to a cash profit that you get, okay, what was the cash from these operations? Which was what we did last week. We used that, we looked at this question to solve that. So, and from this question, we were able to prepare this statement. We started from profit before tax. We moved back to PBIT. Then also we adjusted for interest received and all that. Then we adjust for all non-cash items, items that are not cash, either income or expense that might have been added to your profits. We adjust for them, we did the reverse of what they will have done for your depreciation. that will have been deducted in arriving at the profit we added back. For loss on disposal, that will have been deducted in arriving at this profit. We also added that back. Profit on disposal, which is an income, that will have been added in arriving at this profit. We deducted that. And also, we also did adjustment to, we made adjustment to changes in working capital. So these also are non-cash items that are basically elements of working capital, inventory, receivables, and payables. And basically, where these items lie are in the sales and cost of sales. That's where we take them out. When we
Sorry,
adjust for all of
are you
that,
hearing me? Are you hearing me? Are you hearing me?
are you trying to ask a question? When you adjust for all of that, what you will get is this amount is a cash profit. But you need to also adjust for tax. Then you would really get net cash inflows or outflows from operating activities. Why this was coming in was because it was completely omitted from the book, so we needed to remove it like that. Then we looked at investing and financing activities. So that's basically indirect method. Now, we have not looked at direct method. So let's use this past question to solve a question on direct method. Then I'll also try and solve one more question, but let's take it step by step. Let's sort out this first before we move to the other one. Okay. So for today, there's this question. We're given statement of profit or loss and other comprehensive income. We're also given statement of financial position for 2 years. I already told you that. There is no way you can prepare a statement of cash flows if you are not given 2 years statement of financial position. Otherwise, you won't be able to do your movement in position. So, of course, they will give you some additional information. And finally, we're asked to prepare a statement of cash flows for Ogbagi PLC for the year ended December 31st, 2022, in accordance with IAS 7 using direct method. So, which shows that the examiner will always tell you the method you are supposed to use. Here, they want us to use the direct method. That's fine, and it's 20 marks. So ideally, in a question like this, for me, for exams, I always prioritize theoretical questions. After I've exhausted that, a question like this, you can get 20 over 20 if you follow the approach I told you. And thankfully, if you look at the statement of financial position they gave us, they have made our life so easy. They have made my life so easy. Is there anyone that can tell me why I'm emphasizing that they have made your life so easy in this question?
The movement is given.
They've already done the movement.
Thank you very much. They have already given the movement. So when student came out, I think I was not teaching this topic. I didn't teach that diet, but I could hear people complaining that what was that increase or decrease meant for, whatever. And I was wondering that okay, because there are different ways in which people approach this being the best approach, identifying movement. But people were confused and saying, what are they supposed to use these ones for? Is it a cash book or something like that? I mean,
I was one of them.
nice one. Okay. But really, it makes your life easy. All those workings that you did, now I won't have to do it again. All those movement I was doing one by one, it's actually time
No,
consuming. That you have
sorry,
to
sir. Which year
do
is this?
this 2024, November
Okay, sir.
2024. So I won't have to do all of that. So beautiful. So let me just look at the additional notes that they gave me. They gave me plants which had a carrying amount of 40 million, was sold for 56 million, cash, and new equipment was purchased for 200 million. Two, intangibles valued at 60 million were acquired for cash. Three, borrowings of 40 million were made. Four, dividend paid in cash amounted to 200 million. Even this additional information service sweet, like it's just they have given me what I need. Look at the note one first. They gave me plants that has a carrying amount of 40 million. It was sold for 56 million. I know that this 56 million is a cash item. It is going to cash flow under investing activities. They also purchased new equipment for 20 million. I know that that's also an acquisition. Is also going to statement of cash flows. Really need to calculate profit or loss on disposal. So that's sales. I mean, they have given me all I need. So since I'm not adjusting for non-cash items, you'll see the way direct method is done. Second note, intangibles valued at 60 million were acquired for cash. This one also, they have made my life easy. They have already told me. And if you look at the movement, it's jiving. Oh. If you look at the last item under assets, it's intangible. You will see that in 2022, it was 60,000. It was 60,000. In 2021, it was zero. So it increased 60K. The examiner still came and tell me that even intangible value at 60 were acquired for. Even if they don't tell me, that's the assumption. That's the assumption. That's okay, you acquired intangibles. But the guy is very nice. Again, borrowings of 40 million were made during the year and received in cash. If you look up below the VAT tax liabilities, there is a long-term borrowing. You see the movement was 40. That's the one the guy is telling me again. That there is 40. Even if it doesn't give me this note 3, this 40 increase is borrowing. I know it's borrowings. If liability should increase, it's borrowings. It's going to statement of cash flow straight. But they are just spoon feeding you, which is okay. 4, dividend paid in cash amounted to 200 million. Fantastic. They have made my life easy. Even if they don't give you this, you should be able to work it out yourself. But since they have given you, you don't need to stress yourself. Because in the last diet too, the one we solved under indirect method, they gave us the dividend paid also. But just for knowledge sake, I also showed you how you can arrive at it. If you were not given, you should always do that check when you're doing movement in your retained earnings. But yeah, my retained earnings increased by 96 million. But how much is it supposed to increase by really? Because what's my profit for the year? My profit for the year is 296 million. Guys, please, so why did my retained earnings increase by only 96? Where is the 200,000? Who can tell me? Where is the remaining 200,000?
Dividend paid.
Dividend payment.
Fantastic. Fantastic. Dividend paid. So even if the guy does not tell me these last notes, I know it. You can derive it. Movement does it for you. So this additional note always give you more information about those movements, which was what the previous diet also did for us. Now, with this information, I need little or no workings at all. here. Now, for direct method, you need to do a little thinking. So let me do it like this and see if you are going to understand it. So let me write the name of the entity, Ogbagi PLC. Statement of cash flows. We are doing direct method now. For the year ended December 31st, 2024, I guess. Yeah, 2022. 2022. Operating activities. What's the level of rounding off used? In thousands. Okay, now for direct method, it's different from indirect that you are moving from profit and adjusting for non-cash item under operating activities. For direct method, you move line by line on the P&L and you extract the cash element of each of them. You move line by line, meaning that you're going to start from revenue. Revenue is 3.2 million. I need the cash element in this revenue. You know that in your P&L, when you say you have 3.2 million, this 3.2 million will include the ones that you have collected the money and the ones that you have not collected the money, meaning it will also include the ones you have sold on credit too. So this 3.2 million include credit sales. What I need that will go to my statement of cash flows is cash sales. So out of this 3.2 million, I need the cash sales. That is what I need. And how do I go about that? All I need to do, all I need to know is just for me to remove the credit sales. If you remove the credit sales, the balance becomes the cash sales. And I can easily get the credit sales. How do I do that? I just need to know what is my receivables for the year. Not the cumulative receivables, but for the year, which means I need the increase in receivables, specifically trade receivables. And where do I get that? My statement of financial position. And that happens to be the second item here, account receivables. And I can see that they already gave me the increase of 36,000. It increased by 36,000. That means my receivables for this year is 36,000. And that means that's my credit sales for this year. With that information, I can easily get my cash sales. So my cash receipts or my cash sales, let me just write it the way the standard put it. Cash receipts from customers will be that 3.2 million minus 32,000. 3.2 million is the total sales that include both cash and credit sales. But what goes to my statement of cash flows is my cash sales. So I remove the credits. The only place you will get that is in your receivables for the year. Okay, and my receivable for the year is 36,000. That's the increase in receivables they already gave me. So I just deduct 36,000. So how much would that give us?
3,164,000.
That's my cash receipt, and it's an inflow. It's an inflow. Okay, yeah, Gifty. Yeah, I can see you. And please ask your question, Gifty.
So good afternoon, sir. So
Hi.
the question I have is, you said that the reason we are deducting the increase in trade receivables from the sales revenue is so that we can get the actual cash sales for the
That's
year.
correct. Yes.
But since there's uh, since there was accumulated trade receivables, my question is this: the 3.2 million, does it not include the accumulated sales receivables, or is it just the cash? Because I don't understand how they will have like trade receivables accumulated, and when preparing for that year they are not going to add it, and they are only going to add the one for the trade receivables for the year. Then what happens to the accumulated trade receivables? Because I was thinking that at every year the sales revenue will include all the money they sold for that year and outstanding trade receivables. But from what you said, it's like it's only the trade receivables for that particular year they are adding to it. I don't know if you get my question.
Oh, yes, I get your question perfectly, and it's a good question you've asked. So, I mean, it's just important you know that what goes to the statement of profit or loss are activities for the year and for the year alone. Never would you find activities for the previous year in the statement of profit or loss. So when you see a revenue in the P&L, it means revenue for that year alone. Revenue for that, what we sold for that year alone. So this 3.2 million represents what we sold in 2022. Okay, so what we then want to identify is out of this 3.2, how much of it is cash? How much did we sell in cash? All you need to do is just to remove the receivables for this year alone, meaning the one we sold on credit, which is the receivables for the year. And that's why we are working with the increase. I hope I've answered your question, Gifty.
Yes, sir, I understand now, sir. Thank you.
All right, great. I'm happy you understand. Okay, now I'm done with that. I move to the next item. Chinelo, we are solving statement of cash flows. You're welcome to class. I move to the next item. The next item is interest income. Interest income. Now, again, in line with the way I taught the indirect, interest income is not an operating activities item. Things like finance costs or interest expense, interest income goes to investing activities because these are income arising from your investments. So I usually treat it, I avoid any form of complexity. I just go and put it in investing. If I see interest expense, I will go and put it in financing. I don't deal with them in operating. Let them go to, because that's the very simplistic meaning of it. Of course, there are other interpretations, but I don't want that complexity in my life. Let it go to his primary place of assignment. Let him go and sit down there. So I'm going to ignore this for now. The next item is gain on sales of plants. Okay, let me allow you guys talk on this. Who can tell me where is this going to go in the statement of cash flows? Gain on sales of plants.
Financing activities.
Financing activities. Okay, Gilpen said financing activities. I need that, and at least I need 5 people to speak to this.
Investing activities.
Investing activities.
Investing activities.
Investing
Rabia
activities.
investing, Kenny investing.
It should not appear at all.
No.
It should not be used at all.
It's a non-cash item.
It's a non-cash
So
item.
it will not be used at all.
Thank you very, very much, Shola, Vivian, and the other people that spoke to that. And that's the correct answer. It is gain on sale of plants is not a cash item. It will not show this particular item, or as far as this one is concerned, though, it will not show. What will show is the sales proceeds itself, the money we actually received, which of course in these notes, they already did the breakdown for us. The carrying amount is 40 million. It was sold for 56 million. So what goes to statement of cash flow is what we actually received, not this profit, not this gain on sale of plants. It's not going to appear. So we are going to ignore it. Now let's go to cost of sales, which is 1,920,000. So again, for cost of sales, I will show you cost of sales. I will show you two ways. One way is methodical. If you like that one, you can use that one. The other way is fast, and that also methodical. Let me show you. So how do I get the cash movement in cost of sales? You know that your cost of sales is opening inventory plus your purchases minus your closing inventory. That's how you naturally would get your. I mean, people will be really distracting classes. So it's because I'm admin here, so I could easily mute people. That means I just would imagine what other lecturers will be going through. Okay, so opening inventory. How much is my opening inventory? So, okay, in my summary of financial position, I can easily get my opening inventory, which is 260,000. That's the inventory of 2021. 260,000. My purchases, I don't have it, so let me not stress myself. My closing inventory, that's the inventory of 2022, which is 280,000. 280,000. So if I accumulate all this, I have my cost of sales, which I already have. My cost of sales is 1,920,000. 1,920,000. Okay, so I can easily get this one as the balancing figure. So who can tell me what will be my cost of sales? I can easily get this as the balancing figure. I hope you can see my screen. I hope my internet is not lagging.
No, sir.
Okay, so can you get this balancing figure? There are many ways you can get this. What's your purchases? If I do minus 20, I take it to the other side, it becomes positive. So I just need you to give me, what's my purchases from here?
1.9.
No, it's not 1.9. It should actually be 1,940. Because if this is X, 260 plus X minus 280 equals this. Okay. So that will become X minus 20 equals 1,920. Take it to the other side, becomes positive. So you need to be able to get this as the balancing figure, which is 1940. That's my purchases, 1940. So 260 minus 280, that gives minus 20. It goes to the other side, it becomes an addition. Then that's my balancing figure. Now, having determined that, and I can now get my cash paid to suppliers. My cash paid to suppliers, which is my purchases, which is 1940. I will deduct my trade payables for the year, just like I did for sales. So my trade payables for the year is just my increase in account payables, which is 12. Yes, it was 12. Yes, 180, 168. That's 12. So I can get this as the balancing figure. So how much is that? 1928. Am I correct?
Yes, sir.
Okay. So, and this is what I need here. Cash paid to suppliers. So the alternative way to do it is to say my cost of sales, which is this 1920. Okay. My inventory, which is already included here. My inventory, which is already included here. The inventory for the year. So if I go and check my inventories, there's an increase in inventory of 20. So there's an additional inventory of 20. And inventory is a non-cash item. So it's already inside, but it's inside, but inventory is usually deducted before deriving. So this inventory should be added back as 20 to neutralize it, since it was deducted before. So I'm going to add it back because it's a non-cash item. It was deducted. In order to remove it, I'll just add it back. Then my payables also, payables for the year is 36,000. And what's payables for the year? That's 12,000. I will deduct that as well because it's a non-cash item. So, and that's added. That's inside my purchases. So I have to deduct that. But inventory was the deduction. That's why I'm adding it back. And these are items for the year. So if you do the arithmetic also, it's still going to give you 1928. But this is going to be an outflow because it's a cash payment. So for direct method, these are the two this is the approach we use. So you're now left to you to choose this one or just practice how to do it like this always. Either one is okay. Either one is fine. Then I'm done with my cost of sales. Let's have questions. Yeah, I can. Please go ahead. Go stand.
Good evening, sir. So,
Yeah, good
sir,
evening.
for clarity purpose, please, can you just go through how you got that and cash pay to suppliers one more time, please?
Okay. All right, no problem. So
Thank you, sir.
I will just explain everything again. I'll just explain everything. So for the cost of sales, there are two ways, right? Normally, this is how you determine cost of sales. Opening inventory plus purchases minus closing inventory gives me my cost of sales. Okay. So I have my opening inventory, which is the inventory of 2021. I don't have my purchases, but I have my closing inventory. And I have my cost of sales. So I just get this as the balancing figure, which is, if this is X, for example, now, so 260 minus 280, that's minus 20. You take it to the other side of the equation, it becomes positive. Then this is 1940. That's how we got purchases. But we are not there yet. We need the cash element of these purchases, which is my cash paid to suppliers, and which is my purchases minus trade payables for the year. Just like I explained for sales, these purchases include the cash purchases and credit purchases. What I need is the cash purchases, which is the cash paid to suppliers. Together, I only need to take away the credits. So for my estimate of financial position given me, I saw that the increase in payables for the year is 12,000. And if I remove that, I'll be left with this 1928, which is my cash paid to suppliers. And this is what I would use here. I'll just take it here. And I said, alternatively, instead of going through all of these workings, you can easily just get the cost of sales. Okay. In cost of sales, two items are non-cash flows there. Number one is inventory for the year. So I just get the increase in inventory for the year. I am adding it back because inventory is normally deducted. Inventory at the end of the year is a deduction before deriving this thing. They have already deducted it. Being a non-cash flow, to neutralize that effect, I added it back. And secondly, my payables for the year. Those are also non-cash items as well. Those are also non-cash items as well. So I deduct that because that one is inside my purchases. It will give me the same thing. So you are free to use this one, or you just simply do it this way. Did I help you got stand?
Yes, it's fine, sir. Yes, sir. Thank you.
Okay. Yeah. Gilpen, please go ahead with your question.
Okay, sir. So from everything you explained in this cash pay to suppliers, in the workings, can we choose to just say that the total purchases minus the trade payables for the year will still give us the cash paid to suppliers without having to go through this opening inventory plus purchases minus closing inventory? Will that still work on its own, or we need to show all of these workings?
It will work, but they will not give you purchases. So the essence of this one is to get the purchases. That's the essence of this
Okay,
whole one. Because nobody will give you
okay,
purchase. If they are giving us, that means I'm not going to do all of this.
okay.
Yeah, please, next person. Another question, please. Yeah, Chairman, please go ahead. Chairman, I saw your hand. You are muted.
Okay, I said from the question, we were asked to use direct method. But what if the question was not specific whether we should use direct or indirect method? What do we do? Which method do we use?
Use any method. Use any method.
Okay,
Yes.
thank you.
Yes,
Thank you.
but ICAN would tell you which method to use based on the most recent, at least the last 10 diets or 5 diets. They always tell us the method to use. Okay.
Okay.
If there are no
Thank you.
further questions, you're welcome. Let's move to the next item. For direct method, you're moving one after the other. I moved from revenue, got the cash element, moved to interest income. I said I would treat that in investing. Moved to gain on sales of plant. I said that as a non-cash item. Moved to cost of sales. Then I'm moving to staff remuneration, which is 480,000. So this 480,000 again, all I need is the actual cash that was paid. Okay? I need you guys to tell me, this 480, how do I get the cash paid? Is there anybody that can help me with this? How do I get the actual cash remuneration paid? Shola, can you help?
I think if you go, can you hear me?
Yes, we can hear you.
If you go and check at the additional information, if I'm right, I think there is maybe it's no, go up a little, sir. Go up a little. Still go up. Still go up. Okay. You can see we have staff nomination payable. What we just need to just do is that we pick the opening of this, we add to the one in the profit and loss, and minus the closing, we will get the amount that was paid for staff.
How are you doing all of that when they give you the increase already?
Okay, yes, we can still go that way, sir. Because this one now is showing that is increase. That means that so what we can just use that we pick the amount they pay and minus this from it, we get the cash element of it.
Thank you very much, Shola. Brilliant. And that's how but yeah, this information here is not additional information. It's your statement of financial position.
Yes, thank you.
Yeah. So, and that's your staff remuneration paid. And that's all. So if this was not given, if we're not having any liability, if I can't find any staff remuneration payable in liability, that simply means that the staff remuneration here of 480 was totally paid. I'll just take it to my statement of cash flow straight up. So I go to my staff remuneration paid 480,000. I take away the non-cash. I take away the non-cash, which is 4,000. That's the liability for the year. 4,000. So minus 4,000, which gives me 476 as an outflow. I move to the next item, which is depreciation on plants. Aisha, is Aisha here? How do I
Yes,
treat
sir.
this? How do I treat this depreciation? Where will I treat it in the statement of cash flows?
It's a cash item.
It's a non-cash item.
Not a cash item.
So what do we do? What do we do with it? Where do you treat it?
No. Add it back under
Thank you
operating
very much.
activity.
No, I did back under operating activities. So you ignore it.
Ignore it.
This is direct method. This is direct method. Anyone that is not, you are doing direct, picking items one by, you are not working back like you do for indirect. So
Okay, sir.
depreciation, the one that is non-cash, you ignore. So I'm ignoring this. I move to the next item, which is my interest expense. And that's 16,000. Like I told you, I treat interest expense in financing activities. So when I get to financing activities, I'm going to deal with it there. So let me leave it for now. I move to other expenses. I move to other expenses. Again, this is 304,000. What I need here is cash paid. This expense, the cash that was paid. Okay, so just like Shola did, is there anybody that can tell me out of this 304, how much of it was actually paid in cash? How do we figure that out?
Go to the notes section.
I should go to the
Statement
notes.
of financial position.
Thank you very much. Not to the note, to the statement of financial position. Okay, what are we looking for?
We are
292.
going to note the increase from it. The increase, we're going to deduct the increase from the from the general expense, other expense rather, for
So,
it.
so how much is that?
We left for 8, yeah?
I
304
deduct the figure for the
minus
general,
4,800.
it's going to be minus 48.
That's
What
4.8.
is
That because 4,000 it was
2992.
4.8 came into cash came
Okay,
in.
sir. Sir, I
Nine or
think we're going to
299,200.
Maybe deduct it then.
Yeah, 299,200.
okay? But this 48 is not an increase. You
Yeah,
can
it
see that
was
in the
not
bracket.
the payment.
Exactly, it is a decrease. So are you still going, is it prepayment? So are you still going to deduct or add?
we'll add it.
We are going to add it back. You just do the reverse. Instead of, if it was an increase, right? That means that that means you are owing for this year. That's a payable for the year. But this one, you're not even owing, you even overpaid self. It's
Yeah,
a prepayment. You overpaid by
okay.
4.8. So this 4.8, you are going to add it. So other expenses. How much was the expense for the year?
304.
304,000 plus 4,800. How much is that?
308,800.
308,800. After other expenses, what's the other item? There's a profit before tax. Then we have our income tax of 120. So there's the income tax of 120. So I'm going to treat, there's this income tax of 120, and there's another tax I'm seeing here under the other comprehensive income. I can see an attributable tax of 24. So I'm treating those two together. So the same way, this tax now, I just go to my statement of financial position. I will establish, do I have any tax liability?
Yeah.
So there's an increase. I'm owing how much? How much am I owing?
8,000.
8,000.
8,000. But you don't treat, I'm going to teach you IAS 12 very soon. Then you will understand that this tax you are seeing in P&L, this income tax, is actually an aggregation, is a combination of your current tax and your deferred tax. So you are not going to only look at this current tax. You are also going to consider deferred tax, which there's an increase too of 14,400. That also I am owing. So out of these 120,000 plus 2,400, which is my expense for the year. So I want to get my income tax paid. My 122,400, am I correct?
Yes.
Yeah, 122,400. I'm going to remove the one that I'm owing. Current tax, which is 8,000. Deferred tax, which is 14,400. So 8,000, 14,400. So what's my balance?
100,000.
100,000 as my income tax paid. Okay. Is there any other item in P&L? The only item I've not touched is gain on sale of investments. And how do I deal with that? Oyeniji?
Gain on sale of investment is supposed to be a non-cash item.
So, how do you do with it?
You ignore.
It
You
should be
ignore.
not.
Yes, it should be ignored. So you're going to ignore that. And I'm done with my operating activities. I'm done with my operating activities. So you see, this thing just requires practice. It just requires you to solve these things yourself, solve more questions yourself. And there are many questions. There are many questions in your past questions. So all I would just try and do for you is just like I do for other topic. In the handout, I would put close to 7, 8 questions for you. So within your handout itself, you have a lot of questions to practice already. And if you can practice all of that, then you're going to be fine for statement of cash flows. So having adjusted for all of that, what I will get is my net cash flows. I don't know whether it's inflow or outflow, but we're going to establish that from operating activities. So how much is that, please?
351, 200.
351.
200. Inflow.
So inflow. So net cash inflows from operating activities. Any other question? So I move to my investing activities. And for my investing activities, you see, from operating activities, I've actually touched all the items in P&L except the one that are non-cash and the one that I left to be dealt with in investing and financing, as the case may be. And one of them is interest
Interest.
income.
Yeah.
Yes, that I said I will treat in investing.
Yeah.
Again, this interest income is 20,000. So
Yeah.
what I need is the interest income received. Just as we have been doing it, this 20,000 will include the one that you have received and the one that you have not received. For you to get the one you have not received, I will go to my assets. That do I have any interest receivable? Do I have any interest receivable? Please help me check. Do we?
Yeah,
Mm.
Okay, we
Yes.
have.
we
Okay,
have
Yes.
and it's how much? And it's 200.
Problem. Mhm.
So this 200, are we adding it or are we deducting it?
we're add
You're adding it.
Why are we adding it?
because a decrease.
Fantastic. Just like we deal with this other expense payable. So the way it is, interest receivable, in fact, we over received, Seth. We received more than that 20,000.
Yeah.
That's why it's a decrease. So instead of deducting, you add this 200. So, and that will be the first item I will put here. My interest received.
Huh? Who?
Badmus, mute yourself. And it's an inflow. What am I doing? Is 20,000 plus 200. and that's 20,200. And that's that. The other items for my investing activities, I will get all of them from the asset parts, from the asset portion of my statement of financial position. The first item in this asset part is cash at bank. Cash at bank is cash itself, so I don't need to adjust for that because the balance itself is cash. That's what I'll get as balancing figure. Account receivables, I have already adjusted for that when I was trying to get my sales. Inventories, I have already adjusted for that already. Okay. Prepayments, I have not touched that. Ordinarily, it will have been interesting to have touched this in operating, but since we didn't touch it, I mean, we can deal with it in investing. So there is an increase in prepayments. So increase in assets, we're going to treat it as an outflow. Because if we don't treat it or touch it, it's not going to balance. It's an outflow. So I deal with my prepayments. The next item is interest receivable. I already dealt with this. The next item is plant and equipment. It increased by 60,000. But the examiner already gave me the note on plants. They have given me the movement, everything that I need to know. So I don't need to do any stress. So for plants, they told me that they sold plant for 56 million. So I'll have sales proceeds on plants of 56 million. That's an inflow. 56 million. And also, they purchased a new equipment for 200 million. That will be an addition. Acquisition of new plants. That's all you need to do. Okay. But you might be wondering that, but the increase was 60. Where did it come from? And all of that. You really should not bother yourself. But I mean, just for knowledge sake, just for testing sake, you might not really do this because you don't have so much time in the exam. You can do your plant and equipment. You can do the reconciliation, the movement. You can do your opening plant, which at the beginning was 600,000. I was told there was an addition of 200,000. There was a disposal. The plant that was disposed, how much was it? 40 million. Yeah, the 56 is the sales proceeds, but it was actually sold for 40 million.
How many years?
So the carrying amount is 40 million. Then my depreciation. How much is my depreciation?
$100,000.
Depreciation was 100,000. So what's the balance?
660. Okay.
660.
Yes.
Is
Yes.
it the same thing as the 660 here? The closing?
Yes.
Is it the same thing?
It is.
Yes,
Yes.
it is. Exactly. So this is why I said this is not necessary. The guy has given me the addition and the disposal. So I really do not have to go through this movement anymore. Okay, because all I need that goes to cash flow is this addition and the sales proceeds, which I've treated. So this is really not necessary. Okay. Okay. So I've already dealt with the acquisition. Acquisition should be in jackets because an outflow. Then I have investments. Investments increased by 8,000.
Mhm.
Investment increased by 8,000. So this 8,000, what does it relate to?
Is addition.
Addition. Okay. Addition. I'm just trying to look at this fair value reserve here of 5.6. I'm trying to look at what it relates to. And the reason I'm even looking at that is this investment of 8,000. There is a gain on sale of investments here. I'm
Mhm.
sure they don't mean gain on sale of investment because gain on sale of investment should not be in OCI. Is a fair valuation. So this 8,000 you are seeing here is actually not an additional investment, but rather is a fair
Okay.
value surplus.
Yes.
That's a non-cash item. So, and that is evidenced by this fair value. And the reason why we have 5.6 here is because from this 8,000, they already removed tax. So they did 8,000 minus
Yes.
24, which is 5.6. And that's why we are having fair value reserve here. So it is a non-cash movement. So look at the way I linked it, right? Look at the way I linked it up. Otherwise, you will have just put it inside. Maybe the examiner will just leave it and not deduct mark for you because it really would not, just that your reconciliation will not jive. Then we have intangible assets, which is 60,000. So since they didn't, I can't see any evaluation surplus relating to intangible asset here. And the examiner also corroborated that this 60 million is actually acquisition in cash. So I'm free to put that 60 million as acquisition of intangible assets as an outflow 60. And that is all. I think that's the final item. Yeah. So that's all for investing activities. Yeah, I can. Please go ahead with your question. God stand.
Okay, sir. Are we leaving out the investment? We ignore it.
Yes, yes, yes. That movement is non-cash. It's a fair valuation, so you ignore it.
Okay. Okay.
So let's cumulate what we have now under investing. Let's cumulate all of this. That'll be net cash flows from investing activities. How much is that?
minus 189 800.
189
189,
800.
800. Is it outflow or inflow?
Outflow.
Outflow. Okay. So I move to financing activities. Again, my P&L, I left one item for financing activities, which is interest expense of 16,000. So
Yes.
what I need in my statement of cash flows is actually the interest expense that was paid. So the same way, I go to my liabilities, I check if I have any accrued interest. And I can see that after staff remuneration payable, there is actually an accrued interest for the year of 800. So there's an increase of 800. So I'm owing 800. So which means that this 16,000, out of it, I have not paid 800. I hope you are getting the logic. This 16,000 in P&L means the interest that we have paid and the one that we are also owing. All of them is inside this 16. P&L is prepared on an accrual basis. Whether you have paid it or not, as much as it relates to the year, you put everything in P&L. So in this 16,000, for there to be an interest payable for the year as a result of this increase, that means it's already included in that 16,000. That's the way accounting is done. So 16,000 minus 800,
5, 15.
that's my interest paid. 16,000 minus what?
800.
800. So it's an outflow of 15,200. So I'm done with that. I will then move to my liabilities part of my statement of financial position. That is where I deal with items of financing activities. The first item here is account payable. I've already dealt with that. Staff remuneration payable, I've dealt with that. Accrued interest, dealt with that. Other expense payable, dealt with that. Current tax payable, dealt with that. Deferred tax, dealt with that. Long-term borrowings, outstanding. So there's a
Yeah.
long-term borrowings of 40,000 and it is cash because it was confirmed in note 3 that we borrowed 40 million and we
Mm-hmm.
received it in cash of 40 million. So there is a long-term borrowings of 40 million. It's an inflow since we are going to be receiving it. Inflow. After long-term borrowings, we have share capital. It did not move, so I'm ignoring that. Retained earnings, the movement here is going to be dividend. I already reconciled it, and they already told me in note 4 that there's a dividend of 200 million. So dividend paid, 200 million. Finally, is fair value reserve, which you said this movement is a non-cash item, so I'm going to ignore that. Okay. So can you cumulate all this for me? Because I've dealt with everything that I need to deal with.
Two, 265, 200.
Sorry?
No. Not
25 to
255, 200. I mean, 255, 200.
Inflow, outflow.
outflow.
Okay, so that would be net cash outflows. This one too was net cash outflow. Okay. Then you end it with the conciliation.
It's not 255.
It's not
It's
correct,
just
so that is not correct.
175 to
200.
yes.
Okay, thank you very much. So reconciliation of cash and cash equivalents. So I'll do my opening cash and cash equivalents. which is what was my opening cash, which was 240. In fact, I can do this since they already gave me the movement. Since they already gave me the movement, that means I can do cash and cash equivalent during the year. Which is that of operating. How much was it?
351,200.
351,200. Then I have investing, which is how much?
189,800.
And I have financing activities, which is how much?
175,200.
So let's cumulate the three.
$13,800. Outflow.
Outflow or inflow?
Outflow.
Outflow. You see that it's exactly the same thing as that movement.
Yeah.
Or in cash at bank, which is that 13,800. So it jives automatically. It jives automatically. So that is how cash flow is done anytime, any day. I'm going to solve. Do you have any more question? Okay, so Ifeoluwa says she's struggling with interest received. Yeah. So just like I explained to you earlier on, so the interest income was 20,000. This interest income includes the one you have received and the one that you have not received. Okay. So I really need the one that you actually received for this year. That's what I need here. But when we got to my interest receivable, I saw that there was none that you have not received. There was none because there was a decrease in receivable. There was a decrease in receivable. So as far as this 20,000 in P&L is concerned, as far as this year is concerned, there is no interest receivable for this year if it did not increase. So this decrease means that you have over received your interest for the year, meaning probably maybe they were owing you last year. And of course, last year, the interest receivable was 600. This year is 400, meaning they were owing you last year. They now paid part of last year too also. But your P&L will not show interest received relating to last year. P&L will show this year alone. But my cash flow wants to see what was the total interest that was received. We don't care which period it relates to. And that's why it's 200 plus, that's why it's 20,000 plus that 200 that we received in respect of last year interest. That's the interpretation. But to make your life easier, if it had been an increase, if interest receivable had increased, we'll have deducted.
Yes.
So if it's a decrease, just add. That makes your life easy. You don't overthink it. If you cannot think through, if you don't understand it deep down, the way I've explained it, then if it's an increase, you deduct. That means that is the one you have not received. That's interest receivable relating to this year. You have not received it, you deduct. But now is a decrease, add it. That's the methodology for everything. Now, I have done questions on directs. I have done questions on indirects. I'm going to solve one more questions. I'll now give you time to go and solve as many. You need to go and solve as many. You need to know these things very well. Solve as many questions as possible. First, go and solve the 3 you are going to solve in class first. Go and sit down on them. Solve them well. Know them well. Before you can then start solving other ones. So that you know that cash flow, if it comes out, you're dealing with it. So let's solve one more question. Now, this is...
Please, can I see the solution? Your last the last one, the reconciliation. Yeah. Okay. Thank you. Okay. Thank you.
Welcome. Now, this was May 2024 diet, 30 marks. That was the compulsory question for that diet, if I'm not mistaken. Yeah. So the question says that prepare statement of cash flows of Badagry PLC for the year ended March 31st, 2021 using direct method. So you see that they always tell us that the method you are going to use, they always tell you in the exam. So here we're asked to use direct method in accordance with ISM. And the B part, they're asking you to discuss profitability, gearing, and investor stake in Baragui. I think I still owe you guys more questions on ratios. I know I've this your handout has a lot of questions, but I think we only solved one questions on ratio, but I'm still going
Yes.
to I still owe you like 2 more questions that I need to solve for you on ratios, but there are some things I need to sort out before I come back to that. I need to sort out sustainability reporting. It's standing too long, and I need to sort out IFRS 18 and IAS 1. And I also need to sort out IAS 24 and IAS 8. I want to sort out those ones before I move to group account and the other ones. So let's deal with this guy. So what is he talking about? How come the question is appearing twice? So they gave me statement of financial position. Typically, they will give us for 2 years, which they have also given us for 2 years. They will give us P&L and they will tell us what to do. So I think this is appearing more than necessary. Okay. Now, so we're asked to use direct method. Let me read out the additional notes given to us. Note 1. They said during the year ended March 31st, 2021, plant and equipment with a carrying amount of 40 million was sold for 55 million. The profit or loss on disposal was charged to distribution expense. So this is May 2024 diet. The one we solved last was November. This is May 2024, and it was question 1 for that diet. So they have already given me details on plants, that a plant with a carrying amount of 40, I sold it for 55. And the profit or loss on disposal was charged to distribution expense. So I really need to figure that out because I am not given. Okay. Secondly, I'm told a dividend of 2 kobo per share was paid in the year ended March 31st, 2021. And there were also bonus issues. So there's also a bonus. Also, depreciation charge for the year was 10 million on furniture and fittings and 30 million on plant and equipment. Also, I was told that during the year, an investment which cost 12.5 million some years ago was disposed for 20 million. The profit or loss on disposal was charged to administrative expense. Dividend received were from investments in shares and immediate disposal of rights issue from the investment in shares in a blue chip company. Okay, so since this is direct method, and I can see that the examiner did not give me movement. So I need to establish my movements because I'm going to need them for me to do everything that I need to do. So in solving cash flow, the first thing your mind should go to is those your movements. Don't just start preparing statements. Establish the movement first. Give that 10 to 15 minutes in your exam. Carefully identify the movements. If you identify all of that, it gives you a methodical order for solving statement of cash flow. So anytime, any day you are organized, you know your starting point that I need to do my movement. The only reason I didn't do movement in that previous question is because they gave me. The examiner made my life so easy with that they did. Okay, but yeah, it wasn't given. So I would establish my movement. I start with my PPA. So my PPA, it moved from year 1 to year 2. But now I have to consider all those acquisitions and all of that so that I'm doing a complete reconciliation of PPA. Okay. Alternatively, which is not advisable because you miss some points, is the fact that you just consider these sales proceeds alone and move on. Right? Because in note 1, they told me that they sold plants, but that's not capturing the complete picture. So for us to really capture everything, I start with my workings. So the first one, which is my property, plants, and equipment. Let me check the level of earning. It was in thousands. Okay. So my opening from the question was 110. I was told that there was a disposal. Okay, there was a disposal of plants with a carrying amount of 40, and which was sold for 55. So which of the, I know that disposal I'm going to deduct, but which one am I going to be deducting in this my reconciliation? Is it the carrying amount or the sales proceeds?
The carrying amount.
Carrying amount.
I hope that's correct, and I hope every one of you understands this, so that it won't just be few of you that understand it, while the others are just looking. In all the questions we have solved on cash flow, we have met this kind of thing. And I've consistently explained it. So by now you should be used to it. So yes, is the carrying amount because this 110 itself is carrying amount. There was one new student that came in last week, and I really like the fact that he engaged the class with those his questions. Today, I'm surprised he's just silent. I don't know why, but it's okay. So disposal is 40,000. That was the only information given. I wasn't given anything about acquisition, so I can't assume yet. However, since I'm working with carrying amount, I would consider depreciation. And they gave me note 3. They gave me depreciation of 10 of furniture and depreciation on 30 of 30 on plants. So that's a total of $40 million. So, or near 10 plus 30 to be deducted as well. That's 40. So, and that's all. So what's my expected closing balance?
30 million. 30,000.
30. But what was my actual closing balance?
$350.
My actual closing balance is 350. So what happened here?
There was a purchase during the year.
Okay. There was an acquisition.
Yeah. Foundation.
Of how much?
320.
20.
320 is going to statement of cash flows as an outflow acquisition. So that's the movement for that. The second item, if I remember it, it was investment. Yes, investment. And the investment, I can see it increased by 30. But did they give me any note on investments?
Yes.
Which note is that?
Note 4.
Right. Okay, note 4. Investment which cost 12.5 was disposed for 20. Okay, so I have to do my investments. My opening, how much was my opening? I think it was 30. Yeah, 30. So the only note they gave me was that investment that they sold. So disposal. So now they gave me the costs and also the sales proceeds. They gave me the cost as 12.5. They gave me the sales proceeds as 20. So which one am I going to deduct here?
The disposal. Abi?
The cost.
The cost.
Cost.
Thank you very much. The cost, which is 12,500. And that's all they gave me on investments. So what's my expected closing?
17.5.
17.5. What's my actual closing balance?
60,000.
My actual closing is 60.
Yes.
Okay. So there's an increase. What does that represent?
Addition.
Additional investment.
Additional investments. Input that's additional investments. How much?
42.5.
To be my statement of cash flows. And there's something I omitted so that I won't forget. There is a profit or loss on disposal that they said is
Yeah.
included in admin. So I simply need to do my sales proceeds minus the cost or carrying amount. And how much was that sales proceeds?
It was 20 million.
20 minus 12.5. So this would be a profit on disposal. How much is that?
7,500.
Okay, so we need since this is direct method. So when we are adjusting admin, so we need to adjust this in admin. Adjust this in admin. So yes, adjust in admin. Who can tell me, are we going to be adding it to admin or deducting it from admin? Since it's a non-cash item. Are we
Deducting.
doing?
Deduct it.
Yeah, that's correct. Because no, we don't know. I'm not going to deduct. Was it already deducted to admin or was it added to admin? It's a profit.
It's like it was added now because it's a profit. They received it. Maybe it was added.
Can we see
But
this?
admin is expense now.
And that's
Since
where it comes from. Admin is expense, yes.
The
so you cannot
question said it was charged to admin.
So we're
People
going
say
to
it was charged.
Let's
so
look
it
at the
was
question.
It's not about the
It
question,
will
but whether
reduce
it's
our
profit
admin.
or not.
yeah, it was charged to admin. So it will
Okay,
have that means it will have
okay.
reduced admin, yes.
Yes, yeah.
It will have reduced admin before. So what do we do to it now?
Okay, we'll not add
So
it
we
to
add
admin.
back.
Exactly. So we need to add to admin. Okay. So even this one self, this depreciation in note 3, they will have been treated in admin. Or where did they tell us they added it? They didn't even tell us where it was treated, but I know they are non-cash item. So we need to assume that it will be in admin. So this one now.
Note 1, sir. That one that they say the charge to distribution expenses.
That one too. We need to figure that one. We need to calculate that and note it. I'm just trying to finalize depreciation so I can note it here that you're going to deduct. Abi? Because no, we will deduct from admin. Because depreciation is an expense that have been added to admin. To adjust it, you deduct it from admin. So the one we did not touch is that disposal, that profit or loss on disposal of PP. What was the sales proceeds compared with the carrying amount? Sales proceeds was 55 and carrying amount was 40. Okay.
Yes.
Carrying amount 40. So this is a profit on disposal of how much?
15,000.
15,000. So are we adding to admin or deducting from admin? No, is it admin? Distribution
Distribution.
It was charged to distribution. So are we adding to distribution or deducting from distribution?
We're adding.
We are
adding.
That's correct because it's profits add to distribution expense. Okay.
So the 40,000 should be in bracket.
But it doesn't matter.
Okay. Jacket. All right. So the next item, yeah, I can see you on Victoria. Please ask your question. Victoria.
I'm trying. Okay, good afternoon, sir. I was trying to unmute, sir. So I don't understand um that profit and loss that because the one for the admin, it was also charged to admin and we added it back. Because I remember you mentioned that if they say it has been charged to it means that it has been added to that and we have to remove it.
Yes, of course. You're correct. Your thinking is right. But what happened here is this. What they were charging to admin now was now an income, was a profit. So like these notes 4 now, these investments, this profit on disposal that was charged to admin happens to be an income. When an income is charged to admin, it will net off the expense. You cannot possibly add income to expense. So charging it to admin in that wise will mean it will have come in as a deduction. It will have netted off your expense. That is what it has done. Which was why now, in order to, since it's a non-cash item, we want to remove that deduction. That's why we are adding it back. It will remove it. To remove it. It was the same treatment that we accorded this note 1 profit on disposal of this equipment that was charged to distribution expense. So it was a profit on disposal. So it's an income. So when income is charged to an expense account, it will net off, it will reduce that expense because it's an income to reduce it. So now that we need to remove it, since it's non-cash, that's why we are adding it back to remove it. But in the case of depreciation, for example now, sorry, let me finish. In the case of depreciation now, right, that one is an expense. It will have been added to admin. So to remove that one is straightforward, deduct. Did I answer your question, Victoria?
Yes, sir. So I understand this part of the profit and loss being charged to profit and loss on disposal being charged to distribution expense. You mentioned that that there was a profit. There was a profit on that disposal. That is why we are netting it off the distribution expense. What I'm not clear on is the administrative expense.
It's the same analogy. It's the same analogy. That one too was a profit. It was, when you are charging it to distribution, it means it's deducted against distribution. It will have been deducted. Now we want to remove it. Since it's a non-cash item in the statement of cash flows, you add it.
Okay, sir.
Okay? Yeah.
Yes, sir.
Okay. So any along that you wanted to make a comment, please go ahead.
Yes, I wanted to just try to get something because the profits or loss on disposal, because it was a profit, so it was used to reduce the expense. That was why it was charged. It was used to reduce the expense. So now we have to add it back. Is that what you mean?
Yes.
Yeah, thank you. Thank you. Oh, thank you.
Right. Yeah, Amarachi, I can see your hand up. Please go ahead.
No, I've understand it, sir. It's just what you have understand.
Okay.
My charger. My charger. It's all right, Mama. I will do that. It's my own. You don't need that. Please.
Now,
Okay. I'll come back.
having resolved all of that, okay, yeah, Mayowa, please go ahead with your question.
All right, so good evening.
Good evening.
So my question is actually with relation to the recent adjustments that you just said there's going to have effect on admin, which is speaking to depreciation, this particular depreciation, which we are going to deduct from admin. So just referring back to the prior question that we did, because it was, I believe we ignored depreciation because we are doing a direct method. And this question is also a direct method. So why are we deducting?
Yeah, because depreciation wasn't, and that's a very good question, I have to say first. So the depreciation wasn't given as a line item here. Okay? If it was given as a line item, we'll have ignored it. But now it is included in an existing expense, so we need to jack it out.
I see.
Yeah.
All right,
Yeah.
thank you.
Very good question, Mario. I like that. Okay. I like when you're able to relate. I mean, that shows your understanding what we're doing. Yeah. The next one is inventories. Yeah. So we are done with this investment. Next one is inventory. So there's an increase in inventories. Can you tell me the amount? How much? 295 minus 120. That's note 3. There is really nothing much around this one. $295 minus 120. How much is that?
175.
Next one, I think, let me confirm. There was an increase in receivables of 30, 90 minus 60. Okay. And all of this, by the time you are used to solving statement of cash flows, you already know what you're going to be doing with this one. Like me, I already know that I'm going to deduct this from I'm going to, it will have been deducted. I'm going to add it back to my cost of sales for this inventory. This one, I'm going to be deducting it from receivables, from revenue. Okay. When you have solved questions, you would know, and you will see that everything is just the same. Just do the movement, you're done. The next one is bank. This one, you don't need to do any movements because the cumulative, this 15,000 year means cash for the year. And that's what I want to work towards. So no need for stress. However, the next item here is share capital. So this one, there is a movement, and the movement here is around 100. But this 100 has some bonus inside because I can see why I knew it has bonus because the question told me in the notes 2, note 2, that dividend of 2 kobo per share was paid. So we paid dividend, and there were also bonus issue. So which means that we also issued some bonus. But the challenge is how much bonus now? There is no clue. Trying to just look for a clue on the amount of the bonus. So what I'm looking for is this. This 100,000 difference. So what I'm looking at is is it everything that was bonus or only
No,
a portion
part
of
of
it? So that's what I'm trying to look for. That is it only a part of it? Can you see any clue? I can only see that they told us, and there was also a bonus issue. So
the dividend that was paid, the 2 kobo,
yeah,
is it not on the number of shares? If you multiply it on the number of shares, I don't know, I'm thinking, if you multiply it on the number of shares, you get the
okay,
amount, which is not up
yeah,
to that 100,000. Net it off from 100,000. I think the balance should be the bonus. I don't know.
okay. So if you get the dividend paid, that one will just go to financing. Dividend paid has nothing to do with movement in my share capital. Yes, I can easily get the amount of dividend paid, fine, but it doesn't explain movement in share capital. So can easily get the amount, but it doesn't explain movement in share capital. So I'm trying to see what explains movement in this share capital. So the only explanation I have here is that it's bonus. Okay, so share capital. So that's how you think through these things. You think through understanding. So because from here now, the opening was 120 and the closing was 220. So there's an increase. Ordinarily, this increase will have gone to statement of cash flows. This 100,000, I will just say, okay, this issue of shares, but they told me that they also issue bonus. And when you have bonus issue is a script issue. Bonus issue ordinarily reflect movement. It's like a capitalization of reserve. You usually take it from your mostly your retained earnings. You're moving it from your retained earnings, you're moving it to share capital. So this is what's happening there now. If I want to look at this bonus now, where is it coming from? I'm still going to get there anyway, so there's no need to rush. So let me just say this bonus first. Since I'm still doing my movement, it's going to unravel itself very soon. So the next one is share capital. For my share capital, what was my opening share capital and what's my closing?
You've done it. 200 and 120
Sorry,
is the
I'm talking
You've
about
done
share
it.
premium. The next one,
Okay. It was 30 against 60.
30 and 60. So there's an increase of how much?
30,000.
30.
So ordinarily this should have been, it should go to, but I can attribute it to that bonus as well. However,
Yes.
my retained earnings, what was my opening retained earnings? From the question, it was 119.
119.
What was the profit for the year? Two
70,000.
16,500. Pardon?
Yes, yes.
What was the expected closing?
280 or so.
You have to give me the accurate figure.
335,500.
335,500. So what was the actual closing? Actual closing from the, I thought you guys, somebody shared the question on the group. Actual closing
280.
was,
Oh, so I'm
was
talking about the actual close, not the expected. Sorry.
actual closing is 280. So this decrease is relating to what?
Dividends paid.
Then paid. And how much is that?
55,500.
So this is where the secret will come out now. So how much? So the dividend was 2 kobo per share, abi?
Yes, sir.
2 kobo per share. How much was the number of shares? 220 divided by 0.8.
That's 275.
275 times 0.02 is how much?
5,005. 5.5. Or 5,005.
5,500. So that means the actual dividend payment is actually 5,500.
Yes.
So how come we're having 55,500 here?
That is this one was just taking the figure straight. You know, it's in thousands, as in it's in millions. We have to multiply it by 1,000 again to give 55,500. I think so.
No, it won't give now.
Okay, it won't give the 500.
No.
It will just,
So this one that we have here is similar to 5.5 million now.
yes, 5.5 million, yes. Why this one is similar to 55.5 million? Okay, it's not the same thing.
So that means the dividend here, this 55,500 that you're seeing here, out of it, the bonus is inside. That means the bonus issue now, the bonus, I was trying to get bonus. I didn't rush. I just assumed that this role is bonus because I don't have the information yet. I was moving sequentially. So when I got to
Yes.
retained earnings, I know it's going to expose everything. I got my balance as this. I know that bonus issue is like you debit retained earnings, you credit your share capital. That's how bonus issue works. So in this case now, the total amount they took out from retained earnings is with 5,500, but the dividend that was actually paid in cash that will go to statement of cash flows is 5,500 out of this 55,500. So the bonus issue,
The
okay,
50,000
is 55,500 minus
minus
5,500. So how much is that?
50,000.
50,000. So out of this amount, so it is not all of this that is bonus. So the bonus element is 50,000. The balance is issue of shares. The balance is issue of shares, which is 50,000. So this one cannot be bonus. We already dealt with the bonus. So this is simply arising as a result of issue of shares. Okay. Oh, okay. Somebody is saying, how did you get the 0.8? Okay, sorry.
Let's see.
So we have an ordinary share capital of 80 kobo per share. So this 80 kobo is the nominal value. So for you to get the number of shares, it's simply 220,000 divided by 80 kobo. That will give you number of shares. Okay. Since they paid 2 kobo per share, so just 2 kobo times that. So which was why, in order to establish the actual dividend that was paid, I just did 2 kobo times, this one gives me the number of shares. This gives me the number of shares. So this is what actually goes to statement of cash flows. So this balance that we have is not everything that's bonus. So this dividend paid includes bonus elements. So I'm able to derive the bonus elements as this, which is this 50,000. All right. Yeah, Victoria, I can see your hand.
Sorry, sir.
Victoria.
I was confused about the 2 kobo and the 80 kobo because this one had 0.02 and the other one was 0.8. But I'm clear now.
Okay, thank God. So that's the retained earnings. I move to the redeemable loan notes. That one increased by 40. So since they didn't, the notes didn't address that, so I'm going to assume it is entirely received. Okay. So this increase in loan note of 40. Increase in loan notes 40. Going to statement of cash flows. Yeah, Ruth, I can see your hand. Please go ahead.
Yes, my question is about the 0.02. You said 2 kobo per share and you're using 0.02. I'm confused.
Yes, sir. So the way you understand it is, if it were to be 20 kobo per share, I will have done 0.2 because 20 kobo is like 20%. 20, I will have used 0.2 times the number of shares if it were to be 20 kobo. So since this is 2 kobo, this is like 2%. That's how you would see it. So it's 0.02. If it were to be 2 naira per share, it will have been just 2. That's just 2 naira. If it's 20 kobo, it will have been 0.2. Now that it is 2 kobo, it's 0.02. Like I'm dividing them by 100, something like that. Is that clear, Ruth?
Yes, it's fine. Thank you.
All right. So after the redeemable loan notes, the next one is trade payables. So this increased by, this should be 51. So increase in payables, that's not 9. Over time, you are going to understand that this usually deducts from cost of sales to get your, deduct it from cost of sales and statement of cash flows. This one, I'm adding, but it will have been deducted already. Add to cost of sales. This one, deduct from revenue. Over time, you know exactly what you're doing with all these movements. So it's not really, then you will see that, okay, you actually need it. So by the time you now get used to it, if you feel that you remember, you might not actually do it, show it in the workings, just go and show it on the face of the account. If you are used to all of this. Then taxation, okay, this increased as well by, what's the increase? Is this 58?
58,000.
58.
Yeah. So increase in taxation. Again, when you are used to this, you then remember that we usually deduct from income tax in P&L to get tax paid, because this is the portion we are owing for the year. If there is deferred tax too, the increase in deferred tax too, we will deduct. If it happens that it is a decrease, just do the reverse hard. That's really the logic. Then there is bank overdraft. I'm going to treat bank overdraft as cash itself. I'm going to treat bank overdraft as cash in itself. Okay, so this 25 is cash. I won't really do any movement. Now, there's a decrease in accrued expense. Let me see the expense it relates to. Okay, I can't see a particular expense it relates to, but it actually decreased. So that means this is as far as this year is concerned, we have done like there's a prepayment, something like that. So for your liability to decrease, so that's like a prepayment relating to a line expense decrease in accrued expenses of 10,000. So that means this one I'm not owing. I'm simply going to add it to admin. Just add it to your admin expense. Okay, since all these other increase in liabilities we're deducting. So this decrease, you should add. Okay, if you don't know the logic in me adding it to admin is because it's an accrued expense. It will have been related to one of the expense. And since they didn't give me any line item of expense relating to this one, so I can just, even if you add it to distribution, you're still good. You're still good. And that is all. So as far as I'm concerned, I'm done with this cash flow statement because I've done the major work. So the only thing I didn't touch is this 7. This note 5. So it says that dividend received were from investment in shares and immediate disposal of right issue from the investment in shares in a blue chip company. Okay, so who can tell us how does this help us? How does this help our situation? I know they are referring to this dividend received in P&L. Okay, so ordinarily, me, I don't think twice. This dividend received, I treat them in investing activities. Okay, and this is just simply confirming my assertion that this is really, it relates to investments, that treat it in investing activities, and I'm going to treat it as such. Okay, so let's prepare our statement of cash flows. What's the name of this company? Badari PLC.
Dari, yes.
Okay. What was the year? March 31st.
March 31st.
So operating activities. Since I'm using direct method,
Since I'm using direct method.
That person should mute, please.
Evelyn.
yeah, I've muted already. So cash received from customers. So how much is my revenue from the question? How much is my revenue?
490,000.
490. Okay. What was my receivables for the year? That's my increase in receivables. That was 30. And I already put it, I'm going to deduct this from revenue. So this 30. So that gives me 460. That gives me 460. That's the first item. The second item in my P&L is cost of sales, which is 222. So what I really need here is my cash paid to suppliers. And I already showed you the two ways. I really like, because I'm used to this one. I will just add inventory, deduct that payables for the year. So it's always very fast for me. because I've solved many questions. I really understand it, that those are the non-cash item inside cost of sales. So my inventory, what is the increase in inventory? That's 175,000. So I'm adding to cost of sales. So 175,000. I'm adding to cost of sales. And I'm deducting payables. This 51,000. So how much is it? All my cash paid to suppliers. Somebody said 346,000. Okay. I want to believe that that's correct. After my cost of sales, the next item is admin, which is 90,000. Admin expense. It was 90,000. Abi? And we already made some adjustments to admin. First, depreciation, we say we're going to deduct from admin, which is 40,000. Next, I have profit on disposal of investments. We say we're going to add to admin, which is 75. So we're going to add that to admin. Then this decrease in accrued expense, which is 10,000. So we're going to add that to admin. So total, how much?
67,500.
67.
500. 67,500.
To be in jackets. Then the next one, after admin, is distribution, which is 40,000. So we are adding this profit on disposal to distribution, which is this 15, 15 distribution expense. That's 40,000 plus 15. And that's 55,000.
Yeah.
Okay, I can see some arguments around this cash pay to suppliers. Please, can we confirm, is this 346 or 344?
It's correct, sir. It's 346.
It's 346. Okay, good. So after distribution, we have finance costs. I always treat finance cost in financing activities. I treat dividend received in investing activities. Then I have my income tax, which is 70,000. So I have income tax paid 70,000. How much are they owing? They're owing 58 this year. So deduct, I already did deduct from income tax. It is 58. So how much was paid? That'll be 12, I guess. Yes, 12. And that's all. So net cash flows. from operating activities. So how much is that?
Minus
20,500. 20,500.
Okay.
So please, can you put on this left? I can't see my calculator.
Now, let's go to investing activities. I've already done all the movement also. And you know that I just need to work with the asset part of my statement of financial position. But before then, don't forget your dividend received in P&L of 153,500. And since I don't have any dividend receivable, that means it's entirely only received. Okay, so dividend received 153,500. Let me start with that. It's an inflow 53,500 for my P&L. Okay, then my PPE, I already did the workings. I know there was an acquisition of PPE here of 320,000, which should be an outflow. And I also know that there is a sales proceeds from sales of PPE, which in the question was 55,000 in note 1, because they sold for 55,000, an inflow, and that's all for PPE. Then the next item, which is investment, I already did the workings. I know there was an additional investment of 42,500, which is going to be an outflow. And I know that there was a sales proceeds from these investments in the notes, as they told us that they sold an investment. In note 4, it was disposed for 20 million. So I'm going to have 20 million. Okay. And that's all really, because if I check my non-current assets, it's really PP and investments. My current, I've already dealt with them. Inventory, receivables, bank is the balancing figure. So let's get the total here. So these outflows, if I forget. So what do we have here?
$134.
How much? Is it outflow or inflow?
Outflow.
Investment is mostly outflow. Outflow, okay. Now, for my financing, I go to my liabilities and equity, but let me deal with my finance cost first, which is 5,000, and I don't have any interest payable, so it is entirely fully paid. So 5,000 finance costs, it's fully paid. No way. Outflow. After my finance costs, Under my, let me do my share capital. Share capital, share premium, dividend paid. So my share capital 50, share premium 30. Share
I guess
capital.
I go manage you. Because like this.
I promise, mute yourself. I don't know why you're muting yourself in the first place. You're not talking. I know why you're muting. Share premium. Dividend paid. This is outflow. Outflow of 5,005. What again? So I've dealt with all of this. Then I'm sure there will be this loan, redeemable loan notes, which of course will be the next item, even in here. That's loan notes. Is an inflow. Okay, so that's all my liabilities. So for my current, I already dealt with payables, I dealt with taxation, bank overdraft, balancing figure. I already dealt with admin expense. I added it back to admin, And that's it for this one. So let's cumulate it together. How much is that? 109,500. Is it outflow or inflow?
Inflow.
Okay. So let's do reconciliation of cash and cash equivalents. So first is my opening cash and cash equivalents. So opening, what was my bank balance at the beginning? It was 40,000 bank, and overdraft was 5,000. So 40 minus 5.
35.
Then let me just do closing cash and cash equivalents. So how much is that? That's 15 at the end. The bank overdraft is 25. So 15 minus 25.
10.
That's minus 10, Abby. So cash and cash equivalents during the year is how much? This should be 25,000, which should reconcile with my operating activities items, which was how much? 2,500. My investing activities, 134,000. My financing activities, which is 109,500. What do you have?
Sir,
What do you have?
go 4,000.
Is that inflow or outflow?
Outflow.
Outflow of 4,000.
So somebody must have given us a wrong cumulation somewhere. So when you guys are doing your revision, I'm sure you should be able to go and add it yourself and see where the addition error will have come from. Definitely not from the methodology that we have used. So just if you're able to see it, just write it on the group and let us know that, okay, this was what we added wrongly, or this is what we did not add. Something like that. Because I cannot be adding that over and over again. That's a total waste of time. Okay. Do you have any questions? Okay, so what you're supposed to do first, if I were you, is we have solved 3 solid questions on statement of cash flows. Your business first is for you to go and solve these yourself before our next class. You need time, sit down and solve it yourself. These are not the type of topic you want to postpone. You can make your life easy and just get it now, right? Before we even move to another topic. So make sure you solve this and remember to do the addition yourself and ensure that this thing reconciles before the next class. I need you guys to write it on our group and you tell me what did we miss out, or what was the wrong thing that we did not add rightly. Just put it on the group and let us know when you eventually discover it. And you have to discover it before the next class. You have to discover it before the next class. And don't go and
Sir,
start doubling anything.
excuse me, sir.
Yeah, Evelyn.
The first one, the operating activity is supposed to be in jacket, is a cash outflow. So that's the first correction there.
You guys should go and do it yourself now.
Okay, sir.
So I'm sure you're going to see whatever it is. Yeah, Gifty, please go ahead.
Okay, sir. My question is not on this topic. It's on the last topic we did before statements of cash flows. That's interpretation of financial statements. There's a definition you gave us over trading. You said it occurs when an entity is doing too much too quickly with insufficient resources. So I don't really understand what you mean by doing too much. Is it that they are selling what they don't have? Because there's no way they are going to sell what they don't have. Or because they cannot just collect money without giving people their goods. So it's that they are producing what they don't have. And the same that they can still also produce without raw materials. So I don't really understand what it means by they are doing too much with insufficient resources.
Okay. So that situation arises. Really, in fact, the way you identify that is this. If you look at the statement of financial position of a company, for example, let's say in 2021, if you look at their cash position, if it was zero, let's say they are in a positive cash position, they had money, let's say they had 2 million. But in the current year, in the previous year, they had 3 million cash. In the current year, it has become negative. It has become negative, a negative cash position in the current year. So they don't have money again. But when we look further, we saw that this company revenue went up. They are doing a lot of revenue. You saw that they are making profits because they are doing revenue. See, that alone shows that they are doing too much. Doing too much means that you cannot support your activities with underlying resources. You don't have the resources to back it up. So you don't have money. How come you're making profits? That's overtrading. That means you're selling, you cannot recover your debt, you have used all the resources you have to, and you now see that they would be in a negative working capital position, or they will be taking additional loans. Their long-term loans will also be increasing. So when we say you are doing too much too quickly, it means that the level of activity you are operating at, your resources that you have, the capital you have cannot cope with it. It cannot. Because tell me why you would be doing well, selling, but you don't have money. And you are looking at that, okay, your loan is in, so you are funding it with, so that's what we're saying. It's just similar to a student that is very busy, that does not have time to read, but he wants to write all the 5 papers. That's overtrading too. Because the resources to support your level of activity is not there. You don't have the time. And you want to write 5 papers. That is just the simplest analogy to it. That's
Okay,
just the
sir. I
simple.
understand it now.
All right.
Yeah.
Yes.
Thank you.
Bye. See you.